The Australian Financial Review.
Hello, I'm James Thomson, Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is the senior Chanticleer columnist at the AFR, Tony Boyd. Tony, how you going?
Really good, James. I just can't believe it's March already.
Oh, it's flying by, isn't it? Well, today we've got a great show. We're going to look at the war over the government's $3 million super tax, explain why the big business delegation to India has a distinctly green tinge, and we're going to look ahead to the RBA's big rate call next week. But before we get there, Tony, I had a chat with the great Gerry Harvey this week, and that sparked plenty of interest among our readers because of two things he said. Firstly, he said that Harvey Norman shares are so cheap, we should all sell our house, our boat and our car and buy Harvey Norman stock. And secondly, he said the bulky goods sector, which is basically those big homemaker centres and Bunnings places you see everywhere, is the hottest part of the nation's property industry. Tony, has the Chook Super Fund taken any of Gerry's advice?
Well, to be honest, James, I'm a customer, not an investor. In fact, last weekend I bought a new clothes dryer, and I've got to say the experience at Harvey Norman in Gordon was fantastic. They arranged the installation, took away the old one. But would I buy shares in the company? No. I mean, if I want to get into retail, JB Hi-Fi has a similar sort of PE multiple and a much better track record. It's outperformed Harvey Norman over the last 3 years significantly. I mean, I know he keeps saying there's billions of dollars of unrealised value in the property on the balance sheet, but to me that's not a reason to buy a retailer. I mean,
fair enough.
Were you convinced by his arguments?
Oh, not so. I'm with you. Not so much on the shares, but I was more convinced on the property angle. Gerry's point was that basically a property for this sector is now impossible to find. And it sort of makes sense when you think about it. Most of the good properties now have a Bunnings or a Harvey Norman or a homemaker centre on it. And when you see a new Bunnings or a new Harvey Norman, they are in sort of second tier locations, I guess. So I do have more sympathy for the bulky goods sector argument. And, you know, when you look at Harvey Norman's share price, the company's worth about $4.8 billion. The property portfolio's in the book for $4 billion. So that says that you're getting a retail business for $800 million. I can see the argument that there's perhaps some value to be had there, but I guess, Tony, this is not a great time in the cycle for consumers.
No, and look, just on the bulky goods and logistics, I do have a company called Goodman Group in the Chook Super Fund. I mean, what a fantastic company. And it's, of course, a fund manager that is expanding its assets under management and making that its core business through third parties who are financing a lot of that. So it's actually the same model used by Charter Hall. I think I reckon there's now a challenge for Gerry Harvey to break out that property, put it in a separate company, and let's see what it's really worth. Let's see this great performing property engine do its stuff as a separate company.
Yeah, can't see it happening, but it's an interesting idea, Tony. We're talking about companies that have had a tough week. If you think you've had a crappy week, spare a thought for Downer EDI. On Monday, their stock fell almost 24% after a big profit warning. On Wednesday, their chief financial officer resigned. On Thursday, it came to light that some of their staff are being investigated by New South Wales anti-corruption watchdog. And then on Friday morning, the chairman, Mark Chellew, resigned after the profit warning on Monday. Tony, I haven't seen too many worse weeks than that. This has snowballed in the last few days, hasn't it?
Yeah, it's turned into a complete governance train wreck, hasn't it? I mean, what sort of information was travelling up to the board? And by the way, did you read the stock exchange statement they made about the $22 million restatement of that contract that had, the utilities contract that had gone bad? I mean, there's some bizarre stuff in there, James. I mean, basically they made assumptions that all of the revenue from a new contract from the same customer would be exactly the same as the previous contract, even though it had a completely different terms and conditions and geographic reach. It's like the place was sort of working as if on robotics and no human intervention. It just seems... I can see why the fund managers around it are really mad and angry.
Yeah, and we should point out, Tony, that their anger hasn't just come up in the last week. I mean, they haven't. That their fury has been building really for 4 or 5 years. In some ways, it goes back to when Downer bought Spotless. Spotless is a catering business, an industrial services business, as you'd call it, that they used to do, or I think they still do, the catering at the MCG and lots of big sporting events. But that they bought that business in 2017 for $1.2 billion. Lots of people said it probably would have gone bust within a couple of months and they could have picked it up for cents on the dollar. But they've never made any money out of it. And since 2020, the drumbeat has been from fundies, when is this thing going to turn around? And instead what we've got is profit warning after profit warning after profit warning. And it's only now in this last week that we've started to see a bit of accountability come through. These things often happen like this, Tony, don't they? It's a slow-moving train wreck until it's a very fast-moving train wreck.
Yeah, and I've always admired Simon Marwini, who's at Allan Gray. They're the contrarian investors who buy into these beaten-up companies, and other people follow them in there. The problem was that the profit warning issued last year was, caused the share price to fall by a quarter. And was that the time to buy? Well, I think there's an old expression that lift a rock, there's more than one cockroach going to come out. And we're now seeing there's 2 or 3 under there. And this might even be more.
Yeah, well, it remains to see whether the sort of bloodletting's finished. And then even when the bloodletting's done, they've sort of got this issue now that they could be a prime target for a private equity bid, or the share price has halved since last August. They've got no chairman, a CEO who's only been in the role since Monday. If you're an opportunistic private equity fund that's been looking at this thing for a while, you couldn't find them at a more vulnerable moment, could you?
Yes, that's the thing, isn't it? Would you trust, though, the cash flow statements at the moment? And because that's what PE would do, they'd leverage the whole thing up. Yeah. Because, you'd have all of these very consistent, reliable, long-term contracts. It's just what's buried in some of those contracts. Yeah,
that's let's hope we see a bit more, but it's hard to catch a falling knife, obviously, as an investor, but this one looks like it's in for a rocky period. Tony, let's move to the big business story of the week, which clearly came out of Canberra, where Prime Minister Anthony Albanese and Treasurer Jim Chalmers announced on Monday that they would double the tax on earnings in super accounts with more than $3 million from 15% to 30%. It's a move that they say is going to hit about 80,000 super savers, which is only 0.5% of the super universe, but the reaction has been swift and I guess pretty predictable. The opposition's called it a broken promise and accused Labor of hiking taxes. And the superannuation industry, well, they are sort of stuck between cautious approval and concern about the details. Ross McEwen, the CEO of NAB, came out and said he thinks it's a good idea on Friday morning and everyone needs to chip in to fix up the budget. Tony, what were your first impressions of A, the policy, and B, the reaction?
Well, as I said last week, I reckon someone with $3 million in their super should be able to live a comfortable life through to the end of their life. And that's while getting generous tax concessions. But look, the idea this is not retrospective does ring a bit hollow because people who invested under the old rules assumed those rules would stay in place, but obviously they're not. So, and just to be clear, there was a lot of confusion. We had to wait until the Wednesday for Treasury to put out a fact sheet where we discovered there's more problems lurking in this policy change than we'd first thought. So, it's a bit confusing as to why do you think they're investing so much political capital for so little return?
That's exactly the bit I don't get, Tony. So we know that this is when this policy, when it's up and running, It doesn't start till 2025, so the first full year is 2026. The first full year, it's going to raise $2 billion a year. Now, okay, that's every little bit helps. But this is an incredibly small amount of money to sort of go to war with everyone over. I just don't quite get the amount of political capital for the budget return. I don't get that equation. Am I missing something?
Look, it's just such a long period of time between announcing it this week and the policy being implemented in May 2025, which is after the next election. Yeah. So why put yourself out there to be hammered for several years for a policy that could have been announced 6 months out?
Yeah,
I don't get it.
I had a chat with the CEOs of two big super funds this week, and they were sort of a bit baffled as to how this super debate has rolled out. I mean, we've been covering it on the podcast. First, we sort of had this debate about the purpose of super, and then that morphed into this idea of should super funds help with nation building, and now we've morphed into this idea of the $3 billion cap. And along the way, we've had those disastrous comments that you called out from Stephen Jones, the Minister for Superannuation and Assistant Treasurer, who described super as a honeypot. I mean, that is still resonating. I can tell you that is still resonating in the super sector. They are of the opinion that words matter, and he couldn't have got his words any more wrong. So are you surprised, Tony, at how this has built and built and built into this battle?
Yeah, I am. I mean, when you think about it, Big Super was so powerful and influential throughout the Morrison government to the point where the government basically backed off because every time they tried to put something up through the Senate, it got knocked back. So they did get some reforms through, which were very good, including increased disclosure on a whole lot of ownership of assets by super funds down to some granular level. But what they've done now is, and this may be a good thing, they've triggered a whole new layer of complexity, especially this idea that you're going to be taxed on unrealised gains in your super fund when the balance of your fund is above $3 million. So, look, the advice industry, there's 80,000 people who are going to probably have to go and get advice. Do they put more money in their family home? Did they start using family trusts? I mean, this is actually a really bad outcome. We already know family trusts are probably used to lower the taxation of people who are, putting money to people on no tax. So there's all sorts of financial, or should I say taxation engineering going to start happening. Of course, the average tax rate outside of super is about 30% for most people because of the use of trusts and companies. I think what will happen is franking credits will become even more important than ever, which sort of worries me slightly because it means Jeff Wilson's going to be in the paper every day.
Well, we should say hello to our friends in the accounting, legal and wealth management industry because you're about to have a lot of fun advising your clients on how to deal with this. Let's just come back to this idea of unrealised gains, Tony, because I think this has become a real sticking point. So at the moment, you pay tax on your super earnings. So let's say you've got shares in BHP and they pay a dividend. You pay tax on that dividend income. What they're saying, though, is that if between 1 year and the next, the value of your BHP shares go up from, say, $100 to $200, then that increase will count as earnings and you'll pay this 30% tax on it if you've got an account balance over $3 million. It does feel a bit cheeky, might be the way to describe it, Tony.
Yes, well, look, I'll have to check with my financial advisor, Charlie Viola, whether all those losses on Bitcoin miners, can I carry them forward?
That could help you.
But I'm not anywhere near breaching that 3 million cap, but that will obviously become important, the carry forward of losses, which will then be able to be offset against the unrealised gains.
Again, hello to our friends in the accounting industry. We can hear you rubbing your hands together. Tony, the big question out of this, I reckon, is Labor using this as a sort of practice run for bigger reforms? We saw this week they put out a tax and expenditure statement that showed capital gains tax is the biggest tax concession on the books, the biggest hit to the budget. Could they be using this as a practice run for talking about capital gains tax reforms?
Well, I think that died very quickly. We saw, Koshi sort of trying to bully the Treasurer into ruling out that there would never be changes in capital gains tax until the end of time, which is sort of a pretty ridiculous notion that a government can never change any tax.
That's a long time.
It just seemed, but eventually we did get the Prime Minister come out and said there'd be no change to the capital gains tax regime.
Yeah.
So, look, it's getting a bit sort of silly in a way, isn't it?
I'm going to disagree with you, Tony. I'm not sure they'll go after capital gains tax because it is very sensitive, but I think this does have the feeling of a bit of a practice run. They've sort of built this idea over the course of 4 or 5 weeks. They've floated it. They're going to see how much heat they're going to get and how much heat they can take. I think Chalmers is serious about bigger picture reform, and that's not a bad thing. So, but I think this has got the feel of a bit of practice run. So I guess let's see where it goes in the lead up to the May budget, hey?
Yes, yeah, that's always a good time to catch up with your colleagues in Canberra and go out for dinner at a very nice Thai restaurant there.
Yeah, and report on the budget and stuff too, Danny. Right?
Yes, of course.
On to our second topic of the week. Next week, the Prime Minister, Anthony Albanese, of course, is attending the Australian Financial Review's Business Summit in Sydney. But then he's quickly going to be onto the jet. I don't know what it's called these days. Be onto the jet with a high-powered delegation of business leaders heading to India, where the Australian business community will seek to, I guess, re-engage with this massive new force in Asian growth. Tony, can you start off by telling us who's who on the trip? Who's got the golden ticket?
Well, there's 25 CEOs from a range of industries, including financial services, mining, retail, manufacturing and health. And they're all going to be on the delegation, including Shamara Wickramanayake from Macquarie, Matt Common from CBA, Shane Elliott from ANZ, Rob Scott from Wesfarmers, Andrew Forrest from Fortescue Metals, and Alan Joyce from Qantas. I didn't get the complete list. I think the PMO was still working on that. But it's a pretty powerful group. I think it's very similar to the group that went to Indonesia with the Prime Minister. He obviously likes to have the power and force of business in tow when doing these trips, and I think that's pretty smart. And look, it's a good opportunity for building closer economic relations, and because to be honest, a lot of Australian companies have no idea about India, no connection with India, and very little operations in India. Yeah,
we've really put our eggs in the China basket for a long time, perhaps to our, as it's turned out in the last few years, our deficit. Is this an opportunity? I mean, India really is a rising force. BHP during reporting season was talking about how the Indian economy is picking up and is likely to sort of keep picking up heading into the Indian election this year. Is this a bit of a way we can get into this Indian economy and perhaps, I don't know, take our reliance on China down a notch?
Yeah, look, I mean, obviously our China relationship's all dictated by iron ore and coal and, to a lesser extent, tourism. With India, there was some good statistics out this week. In the 6 months to December, 44,000 student visa applications came from India, and that was, for the first time, more than from China. So it's good if it's going to be a relationship based on intellectual property, selling services. It's fascinating that the ANZ Bank has 7,500 employees in Bengaluru, their service hub. Macquarie's got about 1,000 people working over there, backing up their systems. CBA, I think, has got 3,000. So that's a pretty good trend, and I think more Australian companies are probably going to do that. Especially, you'd think companies like the ASX who need COBOL programmers. India actually trains them.
So there you go.
So the chess operating system can function thanks to India and its investment in a 50-year-old technology.
Well, there you go. You can, we can always find a way to help our friends at the ASX. Now, one of the topics on the list, on the mind of Delegate Andrew Forrest, will be hydrogen, because India is doing some really interesting things in the hydrogen space. They're perhaps even more ambitious than Andrew Forrest himself.
Well, James, you may have seen that GQG has just invested $1.8 billion into a range of Adani group of companies. And I'm pretty sure the motivation there is that they're right into the decarbonisation of the Indian economy and building the green infrastructure. So there's obviously a lot of global interest in what India is doing in the green energy space. There's obviously an opportunity here for Andrew Forrest, who's always promoting green hydrogen and trying to find more places to locate factories and facilities to maybe get into the Prime Minister's ear and get perhaps some greater partnership between Australia. Will Narendra Modi, the Prime Minister, announce something interesting? I don't know, but I hope so.
Yeah, I know Albo and Modi will be at the first session of the 4th cricket test next week for the the official playing of the anthem and the start of the game. So that'll be quite a moment, I reckon, with a full stadium as Modi's on the sort of election campaign. I did tune in, Tony, to the Elon Musk Tesla Investor Day. He was a bit more lukewarm on hydrogen, saying he could sort of see some uses for it in heavy industry, but he didn't see any uses for it in transport, which is an area that Andrew Forrest has been quite big on. It's an interesting debate, this one, isn't it? This idea of green hydrogen. There are some people who say if you're going to get renewable energy to make hydrogen, why not just use the renewable energy and sort of cut out the middleman in a way? But I guess this is a debate that we're going to have as we try and pull off this big transition, isn't it?
Yes. Well, I mean, what you're saying is there that we should invest all of the time and effort into electrification of the entire economy. But of course, the difference with hydrogen is you've got the molecules. You can actually move them around by ships and take it to places where it's more valuable and can be consumed there. Because actually I thought that collapse of Sun Cable, which was going to supply solar energy to Singapore, was a classic case of you can't take an electric power grid across under oceans to another country and supply 15% of their power. So there are good reasons why you'd be shipping hydrogen around rather than following the electrification strategy.
The big question here, Tony, crystal ball time. Could India ever become like China for Australia, a sort of linchpin of economic demand, or is the relationship a bit different?
Yeah, look, I think the relationship is a bit different, and it is, like I said earlier, more about the services that can be bought and sold between the two countries, and they've got an objective of trying to have 35% of the population have a university education. Australia could really get involved in that, and they want to see more of our universities have campuses in India. And of course, that's what helped build relationships with other Asian countries, 30, 40, 50 years ago with the Colombo Plan. Australia's education of so many leading people in Asia is really what builds cultural sort of depth.
Yeah. I reckon watch the Indian election campaign and watch the promises made. Modi's been huge on infrastructure. Infrastructure needs steel needs iron ore. You know where to come for iron ore. BHP, Fortescue and Rio are the kings there. So there might be some opportunity to sell a bit more iron ore into India over the next few years as that infrastructure build continues. Tony, we're going to come back after the break and look forward to next week. They're back. The RBA, it's decision time again. We'll be back after the break. Well, welcome back, Tony. We've got a big week next week, you and I. We're going to be in the same city. It's a special time whenever the Chooks are in the same city for the AFR Business Summit. Who are you talking to on stage?
Well, I've got the global CEO of Bank of America, Brian Moynihan, who is a pretty impressive man when you look at his track record. Andrew Forrest, of course, Fortescue Metals. That should be pretty interesting. I believe they've done a really big property transaction somewhere, and maybe he'll reveal that to the audience. Ooh. And then I've got a panel with Shamara and Vicky Brady and Brad Banducci and Jennifer Westacott to talk about the challenges facing Australia. So that's a pretty full day for me. But what about you? Who have you got?
On day one, I'm talking to Matt Common from the CBA before he jets off to India. I'm talking to Geraldine Slattery from BHP, so that'll be really interesting to get a look across the resources world. And then I think I'm closing the conference on day two with a chat with Nicholas Moore, the former Macquarie CEO, who's now got a bunch of roles, but one of them is he's our special envoy to Southeast Asia, helping to deepen business ties there. So it'll be interesting to see how we can get into that region. It's going to be a cracking event, and you can follow all the action on afr.com throughout the day and, of course, in the newspapers as the week progresses.
Yes, well, it's the biggest event that the Fin Review has. It's about 500 people, and hopefully we can get a lot of readers engaged in that. Yeah,
and I hear there's a special dinner on Tuesday night where I hear someone very, very famous is being interviewed on stage. Tony, know anything about that?
Are you referring to Jennifer Hewitt interviewing me about
yes,
about my career?
Yes,
I think you take the famous out of that, and you might have it right. Yes, no, it should be just a quick 10-minute chat about what it's been like working as Chanticleer for the past 13 years.
I reckon we'll get a lot more than 10 minutes out of you. I'm thinking it goes from entree to dessert, and we'll push the treasurer Jim Chalmers back a little bit. The crowd will want more. A couple of other things that are coming up next week. Jerome Powell is testifying before Congress. He does this a couple of times a year, so we'll hear a bit more about where he thinks rates in the US are going. And of course, the RBA makes its rates decision on Tuesday, not long after Matt Common's on stage and as the summit rolls on. So, Tony, what are we going to get?
Well, certainly a big day for Philip Lowe on Tuesday because he's appearing at our conference at 9:55 a.m. So
I think that's day two, actually, Tony.
Oh, I'm sorry. Okay, so he will have something to talk about. I think he'll have the 25 basis points that he'll deliver the day before, yeah.
Yeah, I think that looks about right. I mean, the GDP figures on Wednesday were a little bit softer than everybody thought. So I think 25 basis points, and it seems like there's wide agreement that there's at least another two coming. So March and April, and perhaps another one in May. Does that feel about right to you?
Yes, I mean, what did you make of Bill Evans? He pushed out his sort of terminal rate for interest rates in Australia to 4.1%, and he seems to be, like many economists around the world, going for this higher for longer thinking. Do you agree with that?
Oh, I think it's right. I mean, what's been interesting for me in the last week, we've seen housing markets in Australia and the US sort of stabilise, and even in the US there's signs of growth in the housing market again. So, you know, the idea that the consumer is overly subdued, I just don't think it's right. There's still a fair bit of pent-up demand, Tony, so I think we can get inflation down to, say, 4 or 5%, but it's that jump from 4 or 5% to 2 to 3% that's going to be really difficult. So I think higher for longer does feel about right. Well, one other thing to mention, Tony, next Friday we're going to have a very special guest on the podcast. Now, as everybody knows, you're retiring at the end of March, and that means there's going to be a new chook in the Chanticleer team, Anthony McDonald, who's moving across from the Street Talk column to the Chanticleer Chook Pen. And of course, Tony, we're going to have him on the podcast too. So next week we'll introduce him. And look, he's a terrific fella, isn't he?
Yeah, he's a wonderful guy, and he has some of the best contacts of anyone in our newsroom in business and investment banking. So he'll bring some unique insights to the program.
3 chooks for the price of 2, Tony. It's pretty good.
Yeah, sounds like that deal that Woolies had that they scrapped. You know, they had the 2 barbecued chickens and some bread rolls for $25, and they suddenly put it up to $35. This is pretty good value.
Getting an insight into the Boyd family shopping list. All right, we love questions from our audience. Keep sending them in to chanticleer@afr.com. James Rawlings from Canberra says, "Hi Tony and James, love listening to you both chew over meaty market matters. Just wanted to know what you think about the GST. Will it ever be increased or expanded?" Now, this is an interesting idea, Tony. I have heard it put by a few people that one way to dampen inflation would be to lift the GST. But My gosh, that you think $3 million super caps would be a political bun fight? Imagine raising the GST.
Yes, well, it was the centrepiece of Ken Henry's tax review.
Yeah.
And he made the point that consumption is potentially one of the most efficient and sustainable tax bases available to governments. And it also is a tax, because it's broad-based, it's the least damaging to economic growth. But of course, if we followed in the steps of New Zealand, which has a 15% consumption tax, then we'd have to compensate people who are affected by that because there's obviously going to be paying higher prices for food. I had a look at some charts in the OECD which showed that the tax to GDP ratio of Australia is actually much lower than New Zealand. So New Zealand hasn't actually figured out a way to make its tax system more efficient, even though it has a higher GST. So tax reform is just such a problematic issue in Australia. It's one that our paper has for a decade called for, but there's just the stars have never been aligned. It's just too hard.
Interesting, just to bring it back right to the top to Jerry Harvey's results. His results in Singapore were quite strong because Singapore lifted its GST rate on the 1st of January in order to support the fight against inflation. So as well as monetary policy tightening, they've tightened fiscal policy, so both are working together. That's not really happening in Australia. We've tightened monetary policy, but fiscal policy is still loose to neutral, I guess. So maybe James has got a point, but I just think the politics is against us here. I can't see any increase to the GST anytime soon.
No, and as Ken Henry said, if you go down the road of broadening the base of a consumption tax, you really have to think about areas that are not captured, like financial services, because they don't actually produce a product. They're making a turn on the deposits and the loans. And he talked about a cash flow tax. Imagine the uproar in Australia if we were suddenly told that there'd be a tax on cash flow.
Yeah, absolutely. Tony, any recommendations from this week? Any interesting content you've come across?
Well, I wrote a review of The Millionaire's Factory by Joyce Malarkis and Chris Wright, both of whom have written for the Financial Review in the past, so they're very good journalists. And they did a book launch on Tuesday night. I'd recommend the book wholeheartedly. It's the most thorough review of Macquarie's history ever written. And it's got all the characters. It's got the tension between the big egos. It's got turning points in the bank's history. And I went back and did a bit of a calculation, noticed that when the bank listed on the exchange, it was worth 1/6 of the value of ANZ Bank.
Right.
Today, it is now about to pip the ANZ Bank in terms of market capitalisation, and that's because of its offshore expansion, taking risks in global markets and building up to a point where it's worth $70 billion and it earns about 70% of its income from offshore. Pretty impressive.
Yeah, absolutely, yeah. Can't wait to get my hands on the book. It sounds like a cracker. A slightly quicker read from me. There's a great article in The New Yorker called How the Biggest Fraud in German History Unraveled. It's all about Wirecard, which was a payment services firm that sort of was proven to have not much in the way of payments and not much in the way of services, and was exposed by guys at the FT. Great, hilarious story of sort of subterfuge and skullduggery. So really enjoyable article. There's a Netflix documentary on Wirecard too called Scandal with a K that is worth checking out as well. Well, thanks, Tony. Thanks for another great episode, and I can't wait to see you up in Sydney for the Business Summit.
Yeah, look forward to seeing you then, James.
Terrific, and thank you all for listening. Well, if you like the podcast and you want to hear more, consider rating and reviewing us, as it helps others find us. And follow us on Spotify or Apple or wherever you get your podcasts. At The Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com and you can subscribe to The Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thomson, and Tony Boyd. The producers are Lap Fan and Alex Gow. Our theme music is by Alex Gow. See you next week.
the Australian Financial Review.